If you are thinking about buying a home today or even next year, today is the right time to start working on fixing your credit score. For that reason, today I have with me Adrian Cooper, founder and CEO of Cooper's Credit Consulting International. Adrian, could you please tell us a little bit about your company and where are you based?
Hi, yes, thank you for having me this evening. We are based out of Dallas, Texas, and Oklahoma City. We actually have 2 locations. We are a credit restoration company that helps clients to restore, fix, and improve and create credit. We also offer services for budget counseling, student loan, and debt consolidation services. So we kind of can handle the whole gamut of credit and budget counseling for people who are preparing to buy a home.
Awesome. So to start with, what is the definition of credit score? How do you define it?
So a credit score is made up of payment history, revolving history, a mix of credit. It basically is a picture or a history of how you pay your bills. The credit bureaus were made to create us basically a picture, a synopsis on how you spend your money and how you handle your credit. So once they gather that information on a database through 3 bureaus that's called TransUnion, Equifax, and Experience, they create that information. It's calculated with a formula, and that's how you get a credit score. So if you have no history and you're new to America, you're going to have a very low credit score, which is probably going to be a 300, because that's where the credit score starts, and an 850 is the highest that your credit score can go.
That was my question, my next question about the newcomers or people who are coming from foreign countries. You said they start at the 300s. How can they build it up, and what is your advice to them?
So if you're just getting here to America, the first thing you want to do is establish yourself by getting your Social Security card and actually finding a nice bank to bank with. Sit down with your banker, have them to go over what credit is, how to utilize it, and what products they have to help you build your credit. Some products that we like to recommend to people who just get here to America are secured cards and small loans under $1,000. If you can pay those back within 6 months, that's going to create your credit history. And the secured cards, which are utilized as a credit card, are actually good starting points, because you will use your own money to open up these cards and make sure that you're paying the cards on time and that you're only using 30% of the utilization of the card. So if you have a $300 credit limit on that secured card, you're only going to use about $40 to $50 to $60 on that card per month and pay it off every month on time. And so once you do that, you're going to build your credit history. We say 3 is the magic number. So 3 secure cards, 1 secure loan from your bank, and you're going to be well on your way to establishing credit.
So just to clarify, a secured credit card, you said, is when you go to the bank and give them money, so they would open a credit card for you, and you basically use your own money and pay it off to the bank, and that helps build your credit score over time.
Yes, it's the safest and easiest way. Sometimes you come to America, or you're just now starting out credit, no one wants to give you a credit card. I think we've all been through that before.
Right.
I remember in college how I had no credit, and I was just wondering, how am I going to build my credit if no one gives me a credit card? Well, I didn't know there was a such thing as security cards back then. But security cards are going to help you get established your credit with your own money, so you won't get into a lot of debt. And I like them because the limits are very low. So $200, $300, and believe it or not, as your credit grows, I tell people, keep your secure cards open, because that's positive credit history that you don't want to lose. So once you make it big time and you're able to get your own credit cards, don't close those secure cards out, because those are your first cards and they're going to have the longest history on them.
I wish I knew you 5 years ago. I closed my secured credit card. I didn't know that it could decrease your credit score.
Yes.
So for
Yes.
someone who's willing or is about to buy a house, do lenders only look at the credit score, or do they look at some other components in there?
So some people get super excited about their nice credit score, 740 credit score, but wondering why they got told they could not get a loan from the lender. The lender looks at a lot of different factors. One factor that people overlook is actually your debt to income ratio. You can literally have too many credit cards, and the lender frowns upon that because you're considered to be a high risk candidate because you could lean on those credit cards in unforeseen circumstances, and so that makes you a high risk borrower. So what you want to do is you want to make sure that you have just the amount enough for credit, which is going to be based off your income. If you are making $50,000 a year, I suggest people to have, $10,000 to $15,000 of credit card, revolving credit to show in your account. But if you're only making $50,000 a year and you have $100,000 worth of credit out there, they're going to consider you to be a high risk. The other thing is debt to income ratio. If you have a lot of debt or outstanding debt that you have not paid, so for example, if you walked away from your telephone bill and it's $500, you walked away from your hospital bills, they're $3,000. You have student loans that you have not paid on. You want to make sure that those bills are set up on a payment plan and you're working to pay that debt back off. Even if it's gone to collections, go ahead and try to get that paid off or paid down, because that's going to decrease your debt to income ratio. Plus, the lender wants to see that you don't have any outstanding debt that's flowing out there. So you want to make sure you look as good as possible to the lender.
You mentioned something really important, which is the limit to your credit cards. So let's say today I have so many credit cards, the limit is high compared to my income. What do I do? Do I just go ahead and close them before I apply for the mortgage loan?
So if you have some very high limits and you're able, and fortunately, you haven't ran your limits up. If you have, go ahead and get those paid down. If you have not ran your limits up, either way, you can call your credit card company and ask them to lower your limit. Only do this if you have paid your cards down or paid them off. If you ask for a credit limit of, say for instance, your credit limit is $10,000 and you owe $8,000 and you ask them to lower your limit to $8,000, you're actually going to hurt your credit score. So request a limit decrease after you have paid your cards down or paid them off.
Okay. What about the timing, the period? Let's say in 1 year I have applied for Target credit card and Costco and Macy's and all of that. What is your take on that?
So it's not good to apply to credit cards back to back. Within a 2-year span, if you've opened up 7 credit card accounts, you're actually hurting your credit score. Believe it or not, less is more. I tell people the magic number is 3 credit cards, one loan, one bank loan, one small bank loan. But if you have cards that you have already opened, say, hey, I didn't know it, I went ahead and opened up all these cards, go ahead and pay those cards down or off, but keep them open. Just remember, when you close your credit card accounts, you're hurting your score and you're taking away that payment history. Payment history is key. They have to show that you have a nice payment history. And a nice payment history looks like 6 months, 12 months, and farther out, 24 months, and just keep going. So once you get here to America, you want to just get your accounts open, pay on time, and start building that payment history.
Okay, so today if I have so many cards, you're advising me to pay them off and not close the account. Is there anything else that I can do, like decreasing the limit, and how does that affect the credit score?
So yes, you can decrease the limit to the credit cards by calling your creditors and getting those lines decreased after you pay them down. That's going to help you with your debt to income ratio because it's going to be less of a limit. So instead of saying I had a $10,000 limit at Costco's, now I have $5,000 limit, and my card is paid down to maybe 1,000 or 500, and it looks really good to the creditor. So you want to make sure that your limits are reflecting your income. If they're not, the accounts open.
Okay, so we pay as much as we can to decrease the payment or the debt that we have, as well as calling those lenders and decrease the limit that we have on the credit cards. And that would make us look like we are less of a risk to use all that big limits that we used to have.
Yes, that's correct. That's correct. And I kind of want to touch on student loans. I spoke with a gentleman who just moved here to America. He's been here a couple of years. He got a college degree, and he has about $50,000 of credit card debt. His wife is going to school to get her dentist license there in California. And I stressed to him that he wants to make sure that he sets up his payment arrangements with his student loan companies. Reason being is, once you are late on your student loan, that is almost impossible to remove because it's from the government. The government is reporting your payment history to the credit bureaus, and the government is very strict. So you don't ever want to pay late or get behind. They have special programs for students or alumni, people who graduated, that if you need help with a special payment plan to pay your loans on time, or a smaller payment arrangement, that can be made directly to your student loan company. You just have to ask for it. It's called a hardship program. And so just ask for a hardship program, and they can set you up with a special payment plan to help you continue to pay your loans on time.
Awesome. So besides student loans, what are, from your experience, what are some of the other issues that you see on people's credit reports?
So I find that people who just moved to America or new to credit, they really kind of or get very complacent on paying their rent on time or paying their car notes on time, and opening up a lot of credit cards simultaneously. You paying your rent on time is very important. Though your rent is not being reported to the credit bureaus, if you are late or if you default in your rent, you walk away from that apartment and don't pay the landlord or the apartment complex, they're going to put that on your credit report, and the whole amount will be due. The damages to the place, any late or unreported payments of the rent, all that's going to be put together, and it's going to be thousands of dollars. So you want to make sure that when you leave your apartment complex, that you leave it in good standing, and also you want to make sure that you're never late. If you find yourself being late on the rent, contact your apartment complex manager, and they will work out a payment plan for you. The other thing is car notes. Once you get a car, you want to make sure that payment is also on time. People don't know this, but if you get a car note through a credit union, sometimes they have what's called a bi-weekly payment. So if the car note's $300, you can split it up and pay $150 on the 1st and $150 on the 15th to make it manageable for you. And then also too, you want to make sure that if you contact your bank because you're having problems paying your car note, make sure you ask for a hardship program through the finance company. Believe it or not, they will allow one payment to be put on the back end of the loan. And a lot of people don't know that. And you have to ask for it because they just will not tell you. So this is something that you would have to ask for.
So that's a good news to all the people who have student loans, right? Okay, so from your experience, what are things that you can absolutely remove from people's credit report? And we hear a lot of companies doing that, but after some time, people say that things pop up again on their report, like late payments or other negative points on their credit report. What happens here? Why do they pop up again? And what is the difference when you are working on cleaning up the reports?
So when I first started the business, I actually was a part of another company out of Houston, Texas, who promised the world to people. And yes, we were cleaning people's credit up left and right. But I noticed over time, after 6 months or so, clients were saying items were popping back up on the report. So I did a little research and I realized that if you're not setting up a payment plan with your past bills, whether they be hospital bills or collections, those items have a high chance of coming back onto the report. So before people sign up with me, I let them know we create an action plan for you with all your bills laid out, who you owe, telephone number, email, address, and for you to set up your payment plan with them. And then when we go into dispute your items, those items, when they get removed, they're going to be permanently removed because they know in good faith you're going to pay those bills off. So that's how you get the permanent results. A lot of credit repair companies are making false promises to people or over-promising people these results. In the time that you're with them, yes, you'll get your results, but later on, God forbid, before closing, a negative item pops back up on your credit report, which causes you not to be able to close. And so that's why I take it really seriously about cleaning up people's credit, because it's a matter of getting the loan or not getting the loan. And so another thing that credit repair companies do too is I saw they put a fraud alert on people's credit report to show that those accounts have been, there's fraudulent activity. Well, that's not being truthful. That's not being honest. And that's not having integrity. And so we do not operate in that. We dispute your negative items. We tell you to pay your bills off. And we have up to an 80% removal rate of items. Some of the items that are really easy to remove that I found over the years are hospital bills. I had a lady from Philadelphia who had over 40 items on her credit report, negative items from hospital bills. We were able to remove 35 of them. And so I thought that was super awesome. And I would say getting student loans out of default back onto a positive status history, because that's what the lenders are looking for. We're able to help clients to do that as well. So I would say hospital bills and getting student loans out of default or out of late pay status is one of the two things that are easy to remove. Foreclosures, bankruptcies, repossessions, those all have to be leaning towards 5 years or older on your report. So once we get to like the 5-year and 7-year mark that has been on your report, you have a higher chance, like a 50% chance of those items being removed. But if it's anything before then, and don't let any other credit repair company fool you, it's going to be hard for them to get that permanently removed. They might be able to remove it for a little bit, but it might pop back up later.
Yeah, it's important to know that, because as I said, a lot of companies promise you a lot of things, especially removing bankruptcies and stuff like that and foreclosures. And you want to be careful who you're paying your money to, so no one fools you on that point. As Adrian was saying, it's really hard. And even if it's removed sometimes, it will pop up again in the future. And you don't want that. So you mentioned a little bit about disputes. Tell me more. How can disputes hurt you? When can they hurt you, and when is it good for you?
So a dispute is when you go and contact the credit bureaus and the particular item on your credit report is something that you don't agree with, or it could totally not be your account. And so once we open up a dispute process for you with the credit bureaus, it takes up to 30 days by law for the credit bureaus to decide if they're going to keep the item or remove the item off your credit report. They contact your creditors for verifications. The creditors have a timeline on when they have to get back with the credit bureau. This all has to happen within a 30-day time span. If the creditors does not get back with the bureaus, believe it or not, guess what? The item gets to fall off because it was not proven that that was your particular item. The other thing is, once the item goes into the dispute process, it cannot hurt your credit report or your scores. In fact, what happens is that negative item moves into the shadows and is not counted for when your scores are being scored. So when they're calculating your score, that negative item during that time period is hiding in the shadows, is not being calculated for your score. Now, once the 30 days is up, and depending on what the results are, then your scores will be recalculated, and hopefully the item has been removed or it's been updated to maybe paid as full or paid collection, which will improve your score. The only time that the dispute will hurt you is once you apply for your loan to your home, once you contact the lenders and they open up a new credit report for you. If they see that you have any open disputes, they're not going to want to move forward with giving you or approving you for money for a home, because those disputes are still open. So before you contact your lenders, make sure your disputes are closed. And the way you can tell your disputes are closed, it will say on the credit report that this dispute has been found agreed, paid as agreed, or this account is in correlation with the Federal Trade Commission. Like, so they'll tell you if that account is positive or negative. So they'll tell you if the dispute is closed or open. So you'll see it on your report. And we kind of go over that too once you sign up with our program.
Awesome. Yeah, so just to clarify or to rephrase what Adrian was saying is that when you go to a lender and you have something that has been disputed, the lender wouldn't want to, take a chance and give you an approval for a loan while this dispute might or could be rejected in the future, and that would hurt your credit score. So that's a negative point on you. So every time, make sure that this is cleaned up before you talk to your lender for you to secure a mortgage loan. Adrian, what are some hacks that you can give the people who are watching us today to fix their credit score? Let's say that their credit score is good. It's not really bad. They might not need professional help like yours. They just want to improve their score. What are some hacks?
Continue to pay your bills on time. Continue to build your credit history. If you already have credit cards that's open, and you probably do, that's why you have a great credit score, you're super responsible, you can actually go to your creditor and ask for a credit line increase, and believe it or not, that's going to boost your scores as long as you stay within that 30% utilization rate and you're paying your bills in full on time. One thing that I find that people kind of do prematurely, once they charge the item on their card, they want to hurry up and pay the bill off. Well, guess what? That charge you made on your card is not showing up on the credit report. So therefore, you're not helping your score because they don't know that you paid that account off early. So it's a really fine line. Once you charge something, wait for the bill to come out and then pay the credit card off in full. Your scores are going to continue to go up. I did it for myself. I have an 824 credit score, and it's been working for me all these years and for my friends and family. So once you get your scores up, keep them there and be responsible with your credit.
Awesome points. Thank you. Adrian, when we go apply for a mortgage loan, we hear the middle score. What does it mean, and why the scores are different from one bureau to the other?
So a middle score, of course, your scores come from the 3 credit bureaus: Experience, Equifax, and TransUnion. So let's say, for example, you have a 500, a 700, and a 600. The 600 score is going to be your middle score. They're going to take that score and they're going to shop it around for mortgage loans and decide what type of interest rates you have. In order to have a nice credit score that reflects between the 3 bureaus, we need to make sure the information reflects on all 3 reports. So I say the rule of thumb is to ensure that your scores are anywhere from 5 to 10 points difference. If there's anything greater than that, then there's something that's not being reported, or there's something that's being reported on one credit bureau and not the other. So all 3 reports need to reflect each other. They all need to look the same.
And that explains why when we check our credit score, we find it very different than the score that the lender looks at when we go and meet with them.
Yes, and I want to add to this too that people don't know. So scoring system. So if you pull your credit report from a third party company online like myfico.com or Karma, Credit Karma, that scoring system could be different than the scoring system that's used at the bank. The bank uses a harsher, stricter scoring system than these third-party companies that we use to pull our credit reports. So don't be angry that your score is a lot different from Credit Karma or any of these other third-party companies. Your goal is to make sure the report is clean as possible, so no matter who pulls it, your score is going to be nice.
That's a good point. So Adrienne, what do you offer the people who are watching us today? What do you offer my clients today?
So we're offering for your clients free consultation. No matter if you're single or married, we can look over your credit reports for free. This is actually a regular price, $100 to look at your credit reports with an hour consultation. This is going to be free to your clients. We're able to look at the reports, scrub the reports, talk about the good, the bad, and the ugly on them, how we can create you an action plan, and what we can do to move forward for you to sign up for the program. And so we've had a lot of people we talked to in the last 2 weeks from California, and it's been wonderful talking with people and planning their future for them buying their homes.
Do you help people only in California, Texas, Oklahoma, or everywhere in the U.S.?
So I help everyone in the U.S. I have clients in Philadelphia. I have clients in California, Texas, Oklahoma, Florida. And so we're able to help clients everywhere. I will tell you this, by state and federal law, you cannot guarantee credit score increases or derogatory removal. If any credit repair company promise you that, that's false advertisement. So just be aware of that. And we all know that, clean up credit is kind of like dieting. You have to stay the course, and the results are not overnight, but the results will come.
Awesome. So to all the people who are watching us today, if you go through me to Adrienne, then you will get a 1-hour consultation for free to look at your credit score, and she will give you hacks that are customized to your own case. If you have any questions, make sure you reach out to me or Adrienne. I'm going to leave her details. I'm thrilled. I'm so excited, and I'm so happy that we did this today. And I am hoping that this will benefit a lot of people, especially people who are thinking about buying their home soon. I wish you all the best and have a great rest of your day.
Thank you for having me.